Welcome back to PhatBear Pod. I'm your host, PB. We got some spicy news fresh off the market for Bitcoin today. The hash ribbon indicator, that grizzled old miner's crystal ball, has just flashed a buy signal for Bitcoin. For the uninitiated, this thing tracks Bitcoin's hash rate. The raw computing power miners throw at the network to keep it chugging along. The indicator uses two moving averages of the hash rate, a 30-day and a 60-day. When miners hit hard times, they start unplugging their rigs faster than you can say hodl. But when the 30-day crosses back above the 60-day, that's the recovery phase. Add a little price momentum. Bitcoin's 10-day price average topping its 20-day, and bam, you get the blue button, the buy signal. Does this mean Bitcoin's going straight to the moon tomorrow? Of course not. After the signal, we often see a little sideways shuffle, maybe even a dip. The stats? Since 2013, it's fired 14 times, with a 64% win rate if you hold for about 253 days. Now let's talk price action. Bitcoin at 87K. Well, look who's strutting around like it owns the place again. It even flirted with 88K before pulling back like a tease. The total crypto market cap at 2.85 trillion. That's a beefy number, up a smidge from yesterday. Bitcoin's hogging about 3/5 of that, per its dominance creep to 60.6%, which leaves the altcoin scrapping for the rest. Then there's a 24-hour volume at 87.3 billion. That's a juicy spike. Sounds like the market's awake, caffeinated, and trading like it's got something to prove. Leverage is fueling this fire, and while that can mean FOMO's kicking in, it also smells like a liquidation trap waiting to spring. The Fear and Greed Index at 34 climbed up 1 point from yesterday. This is still on an uptrend from the extreme fear back on March 10th, though. Historically, sub 40 has been my cue to either bargains, but don't quote me when the leverage bombs detonate. On the macro side, what's the deal with QT? The Fed's been playing reverse money printer since June 2022, shrinking its bloated $9 trillion balance sheet. QT has been a buzzkill for risk assets like crypto, tightening liquidity, and making investors clutch their pearls instead of their private keys. Word on the street is they're slowing QT starting April 1st, dropping the monthly treasury runoff from 60 billion to something like 25 billion. This means more liquidity sloshing around. And what loves liquidity more than a dehydrated camel at an oasis? Risk assets like Bitcoin and altcoins, that's what. But this isn't a guaranteed win. The Fed's not ending QT yet, just slowing it. And two measly 25 basis point rate cuts planned for 2025 aren't exactly a flood of free money. Time for some crypto news next. Robert Mitchnick, BlackRock's head of digital assets. You know, the guy who probably has a corner office with a view of Wall Street's soul-crushing grind. He sees Ethereum as more than just Bitcoin's nerdy little brother. It's a technology innovation story with legs to stand on, even if it's been hobbling lately with high fees and scalability gripes. BlackRock's already got skin in the game with their iShares Ethereum Trust ETF and their tokenized money market fund Buddle, which kicked off on Ethereum a year ago. Mitchnick's hinting that if Ether ETFs could offer staking, it'd be a huge step change for their appeal. Imagine that. Institutional suits getting a taste of those 4 to 5% APRs without having to touch a wallet. BlackRock has clout $11 trillion of it. When they talk, markets listen. Even if half of us are just rolling our eyes at another Wall Street giant dipping their toes in our cesspool. Mitchnick's painting Ethereum as a long-term play, not a pump-and-dump slot machine, which is refreshing until you remember they're still here to make a buck. Trump's World Liberty Fi deployed a stablecoin called USD1 on Ethereum and BNB chain. What's the deal with USD1? It's a US dollar peg token, meaning it's supposed to hold steady at a buck while the rest of the market does its usual roller coaster impression. Total supply is clocking in at over 3.5 million per Ether scan and BSC scan. And there's been some test transfer action with heavy hitters like Wintermute, the market-making whale. World Liberty Fi has been teasing a stablecoin play for months, and now it's here, sorta. What's next? NFT MAGA hats with yield farming perks. The timing's juicy. Congress is chewing on the Genius Act, a stablecoin regulation bill that cleared the Senate Banking Committee on March 13th. If it passes, USD1 might get a shiny legal halo just as it steps into the ring with Tether and USDC. The stablecoin market's a $232 billion beast, up 63% in the last year, and World Liberty Fi wants a slice. Trump's hand-picked AI and crypto czar sat down with Sheikh Mohammed bin Zayed Al Nahyan, the UAE's big boss, in Abu Dhabi. The UAE is dropping a cool $1.4 trillion commitment into U.S. tech, AI, semiconductors, energy, and you guessed it, crypto. The UAE's got deep pockets and a hard-on for cutting-edge tech. Bloomberg says they're itching for U.S. chip access after Biden's export bans, and crypto's clearly on the menu. What's Sachs bringing to the table? He's a guy Trump tapped to make America the crypto capital of the world, and he's been busy. Just weeks ago, he chaired the White House Crypto Summit, pushing that strategic Bitcoin reserve. Now he's globetrotting, pitching crypto to a leader sitting on a $1.4 trillion war chest. But this feels like a hype sandwich, tasty on the outside, questionable meat in the middle. Will it pump BTC or just pad Trump's crypto ventures? Probably both. Next up is new DeFi developments. dYdX starts their shiny new buyback program today, March 25th, 2025. The Perps DEX announced they're throwing 25% of their net protocol fees into buying back dYdX tokens every month. That's roughly 17.5 million annualized, with 107K already scooped up in USDC faster than you can say pump my bags. The goal? Boost network security, prop up the token's value, and maybe, just maybe, give us weary traders a reason to crack a smile. This isn't dYdX handing out free Lambos. It's a calculated play to reinvest revenue into the ecosystem, while 85% of tokens are unlocked and emissions are set to have by June 2025. The community is even whispering about cranking that buyback to 100% of fees down the road, which could tighten supply and send dYdX soaring, if the hype holds. Still, after watching this token crash 78% from an all-time high, I'm not holding my breath. Andre Cronje teased an algorithmic stablecoin recently on X. Yes, you heard that right. It's March 2025, and apparently, we're still flirting with the ghost of Terra Luna, like it's a bad X we can't quit. He drops his gem on X. Pretty sure our team cracked algo stable coins today, but previous cycle gave me so much PTSD, not sure if we should implement. Andre, you mad genius. You just lit a match a room full of gasoline-soaked hodlers. The man's out here casually hinting at a stable coin that doesn't need a vault of dollar bills or a prayer circle to hold its peg. If he pulls this off, it could be a DeFi game changer. Stable value with juicy returns. No fiat collateral needed. But if it flops, well, I'll be over here with my popcorn, watching the I told you so post pile up faster than FUD after an Elon tweet. Now, let's move on to another airdrop on Solana. Fragmetric just snagged a fresh pile of cash from a recent raise, putting their total at 12 millions. What's Fragmetric even about? It's a liquid restaking gig on Solana, designed to juice up the ecosystem security and economic potential. You stake your SOL, or LSTs like Jito Sol or MSOL, and they turn it into Frag Sol, a token that racks up staking rewards, MEV goodies, and extra restaking yields. How do you farm this thing? Fragmetric's got an F-point system. Think of it as their loyalty program with a side of airdrop bait. Here's the playbook. 1. Stake SOL or LSTs on Fragmetric protocol. 2. Restake Frag Sol on Fragmetric or Jito restaking. 3. Use wrapped Frag Sol on integrated protocols like Exponent Finance or RateX. That's it for today's episode. I'll see you guys back here tomorrow.